All right, everybody, welcome back to the Simple Markets channel. As always, my name is JB, and today we're going to be doing some trade breakdowns for you guys, and I'm going to be going over 4 different positions that I have taken within the last few weeks. And my goal, as always, with these videos is to help you guys not only understand the probabilities of a trading plan and a proper mechanical edge, but also to help you guys understand that regardless of the outcome of each of these trades, each of them had the exact same entry model rules when entering them. So without further ado, let's start off here with Pound Chef. So one of the first things I always make very clear that I look for is some form of liquidity in the form of a range or an immediate high or low in the markets. And that can be seen here by this red box that I've drawn where we have a consolidation period and then a very aggressive impulse through that range, followed by a break of structure of the highs. I understand this wasn't the strongest break of structure, and that was something I noted in my journal, but I did get a candle close above it, so it was good enough for me. So based on that liquidation as well as the break of structure, I mark out the low to the high of that range using the highlighter tool. Apologies if these ones here are confusing. I was going over that in a webinar. And as long as I have the fair value gap, which can be seen here in the center of the range, I am okay to take this trade because it follows all of my rules. So price worked its way back down into my entry zone. We very aggressively and quickly ran to my 1 risk to reward area, and this is where I go risk-free on a trade. For those of you that don't know, on MT4, when I go risk-free, it means that I take my stop loss and I move it to the entry level so that now I am break even and I cannot lose capital on the trade. I found personally in my data that I actually get better results and a higher win rate from this, of course. And over time, it does save me a lot of losses because price will run directly to my stop loss after in many cases, compared to the trades that do go and run to TP. Based off that ratio, I found that break even is better for me. Of course, for some of you trading slightly different or with the same rules, with your own nuances, it could be different. And of course, as that trade ran to that 1 risk to reward, we came very quickly right back down and hit that break even level here. So I was out of the trade with $0 profit. Now, technically speaking, on MT4, I put my break-even line a little bit above that entry level, just so I can secure a little bit of profit and also not affect my win rate. However, as we can see, price came to grab that liquidity low, it looks like, and now working its way a little bit higher, which is very common in the markets as well. When you do see something like this occur, it most likely means that your liquidity sweep was lacking in quality, because now the majority of liquidity rests below this low. It was now grabbed here, and then we can very likely see the liquidity come to that target high that I initially had. So on trade 1, we net 0% here, and we're going to go into trade 2. Now, once again, like I mentioned, I love to see these consolidation areas followed by a very impulsive and clear liquidity grab. We can see this consolidation range with very low volume. We very impulsively with these 2 blue candles reached up and grabbed that liquidity. And I like when price shows a nice wick as well. It shows very aggressive and impulsive movement, showing very high volume in the markets. Speaking of volume as well, we like to see that fair value gap before the break of structure occurs. This also tells us that there is very high volume, and more likely than not, the institutions are involved on our side of the market. So price very aggressively grabs liquidity and then breaks structure lower. And as always, I mark out the low to the high of my range and then throw my Fibonacci. And at whatever level you prefer, I typically use the 75 so I can get that fixed 3 risk to reward. You can set your entry and then your target at the low. Price very quickly worked its way back up, tapped me in on MT4, and then once again very quickly ran to that TP for an overall gain of 6% on my personal account. So a 0% gain on our initial trade, a 6% gain on pound US dollar, and now we're going to dive into NZDCAD here. So this one I like to show, this is a negative 2% loss here. But as always, we have the same exact rules, and I want to make that very clear that it's super important to have those same exact rules in a very mechanical system because it ensures when you enter the markets, it'll be the same way every time, and this is what gives you an edge over the long term. So we have a great liquidity sweep here of this very substantial low in the markets. We understand that a lot of liquidity rests below this low, and then price comes and grabs that, followed by a very aggressive break in structure and a smaller, lower time frame liquidity sweep here as well. Once all of my entry model rules were met, I set my order once again from the low to the high of the range with my Fibonacci. We had some great inducement liquidity right before our entry that I expected price to grab and run. And of course, as always, based on the probabilities of the market, price comes right down, grabs that liquidity, does have some form of a reaction, but not enough to get me to my risk-free line, and I do take a negative 2% on this position. So overall, if you're keeping track, we have a plus 0% on Pound Chef, a plus 6% on pound US dollar, followed by a negative 2% on NZDCAD, overall netting about 4% in this period of time. And last but not least, we have AUD NZD. Now this trade is a great example of another reason why I use a break-even rule. As always, we could see the liquidity area here. Now I do get questions about this one from some of my students in my server. This can be considered a lower time frame consolidation area, or in general, this is what's considered internal liquidity. When you see these very aggressive grabs on liquidity like this, followed by a very aggressive fair value gap and break of structure, these are great examples that institutions may be involved on your side of the market. And it's especially apparent when price barely crawls its way back down to your entry level, taps you in, and then hits my risk-free level here, and then price comes back down and takes me out at break even. So once again, this is another 0% gain on a trade, and many people take break-evens very hard. I find them to be a fantastic thing for my data, especially because when you look at a trade like this as well, not only can it save me from losses, but in this example, it saved me from multiple weeks of having to wait through very low and slow consolidating price, just for the likelihood that my stop loss will get hit here after waiting an extra few weeks. I do like break even for this reason. I like my trades to tap in like pound US dollar and very quickly run to TP. And I find that break even, when I do get taken out at that level, I lose no capital, but I get to avoid these weeks of slow consolidation. And I also get to avoid many losses in this case as well. So overall, based on these trades we just looked at, we do have a gain of about 4% in this period of time. It was about 3 weeks. October has been a fairly slow month for me, but still profitable. And you can see based on these 4 breakdowns that all of the rules that I use are mechanical and systematic for every single trade I take. And it is very, very important to have an edge like that involved as well. For those of you that don't know, if you want to check out our website, we actually give away this strategy that I use for completely free. You simply can go on our website and it's right there on the main page. Or if you look at the top scroll bar, you can see the free strategy section as well. You'll be able to download the strategy that you see me using here and I've been using for a very long time. Our entire community trades it as well, and you'll be able to get a bunch of tips or example trades included with it as well. We include a bunch of it in the document, as well as all the rules for the system that we use. Thank you all for watching. I appreciate it. If you learned something from today's video, leave a like and subscribe to the channel, and I will see you guys in next week's video.